All right, welcome. We have some people coming in. We'll give everyone just a second to join us before we get started. All right, and filling up fast. This is great. And we'll start in just a couple seconds here, just as a few more participants join. All right. Hi, everyone, and happy spring. Welcome to the Market Sense webinar series by SuperVest. We're super excited to have you all here. And today, joining us in this show is Jimmy Montgomery from Alto IRA. How are you, Jimmy? Welcome.
Awesome. Well, doing great. I really appreciate you having me on. Looking forward to talking about alternatives and the exciting world of self-directed IRAs.
Absolutely. We're happy to have you. Super exciting. All right, everyone. So just so we're all aware, today's flow of the conversation will be pretty conversational, if you will. So if anyone has any questions, please feel free to go ahead and put those questions in the Q&A box. You should see that at the bottom of your Zoom window. And let's jump right in. So Jimmy, first and foremost, let's address the elephant in the room. Obviously, we want to kick things off with what's been going on in the news lately. SVB, of course, and the bank failures. Was Alto IRA impacted?
Good question. Obviously, very pertinent nowadays. The good thing is that Alto holds no accounts with SVB or any of the impacted banks over the past week or so. So at Alto, we have no accounts held with them, no real exposure from that point of view. So we maybe dodged a bullet, but we're pretty lucky in that sense.
Yeah, that's good. That's good to hear. And, for you, our listeners out there, I'm sure a lot may be wondering, was SuperVest impacted and how these issues might impact the MCA space, our primary asset class here, merchant cash advance. And the key takeaway from our side, at least, is that we anticipate that the current issues surrounding the regional and small banking sector will ultimately benefit the MCA space. What we foresee will occur is now banks will become a lot more cautious, likely, and a lot more restrictive in terms of who they're lending to. Small business owners will then find themselves migrating to an alternative financing tool, which is MCA. So from the investor standpoint, that means better quality merchants migrating over and ultimately better yields and returns, attractive returns. But Jimmy, I'm curious, the topic at hand here, of course, is IRA investing, Alto IRA. So what are some of the benefits to investing through a retirement account or a self-directed IRA?
Mm-hmm. Yeah, great question. And I think that really boils down to one thing, and it's all taxes. Be it a self-directed IRA with Alto, be it a IRA at Fidelity or Schwab. The biggest benefit is the ability to legally avoid taxes. So with any IRA investment that you make, be it real estate, private equity, just stocks and bonds, you are never going to have to pay capital gains taxes on any investment that you make. So, I mean, just thinking about that theoretically with the compounding interest aspect of it, you don't need to pay taxes. So that means that you get to reinvest X amount each time that investment matures. And so with, say, even a Roth IRA, that means you never pay any taxes on it at all. So you invest $1,000 today, that turns into $10,000 down the line. You don't pay any taxes on it, that money is all yours. So there are certain restrictions in place for IRAs to try and sort of incentivize you to save for retirement, obviously the retirement accounts. But that biggest benefit is getting to avoid those taxes and having that investment compound to a greater degree over time.
Absolutely. And that tax advantage is huge. And speaking of, in terms of the types of alternative investments that one can make through their IRA, what are some of those alternatives that one can access through their IRA account?
Mm-hmm. Yeah, great question. And I think when people typically think of IRAs and 401ks, 403bs, whatever type of retirement account, you think mutual funds, low risk index funds. very standard things that have those longer investment horizons that you just want to play it careful with. But there are very few people who sort of understand there's a lot more to invest into, especially with your IRA. So things such as private equity offerings, direct real estate, direct financing to businesses and various companies, securitized artwork. And nowadays, there are really a lot of innovations in the space to be able to invest into these harder assets, these non-public assets. So there's a really big growing field of asset classes outside of just what's publicly traded. And via an IRA, in our point of view, it's a great way to get into those, given those tax advantages.
Yeah, for sure. And, given our relationship, Alto and Supervest, we've been working together a long time. If you can touch upon some of the ways that Alto IRA enables or makes it easy for investors to participate in alternative investments, particularly for MCA, from our standpoint, investors can easily go into their Supervest portal and just enter their Alto IRA account information and easily transfer funds in and out of the account back and forth, which is fantastic. So how does Alto facilitate or enable investors to participate across all types of different alternative investments?
Yeah, great question. So I think I'm not going to hit on this too extensively. It's very complex and a little boring. Historically, using a self-directed IRA has been fairly complex, expensive, and time-consuming to do so. You need to get an LLC set up, an LLC checking account, all that stuff. It makes it very difficult to do so. And so what Alto went out to do was to make that process easier, cheaper, and much more tech-enabled. So for example, with Supervest and our other investment partners, we essentially use your Alto account like a bank account or a debit card. It's really just the funding option at checkout. So I'll say Supervest, for example, once you link your Alto account, once you identify what investment you'd actually like to make, it's more or less just selecting IRA as the payment method. And then those funds will automatically flow through. Everything will get credited back to your Alto account. And at that point, you hold it in a tax advantaged manner where you're never going to pay capital gains on that actual investment that you made. So that's what Supervest with a lot of our other investment partners. And we're building out these integrations to make it as easy as possible to get into alternatives with your IRA without having to go through that expensive LLC process.
Excellent. Yeah, it sounds like it's easier than ever before, which is fantastic. Now, Jimmy, can we touch upon some of the risks and challenges that investors might face in alternative investing?
I think the biggest risk is in one thing. I can't really make investment advice or say to do or not to do something, but I think the biggest risk when it comes to alternatives really is the illiquidity for the most part with alternative assets. Typically, they have a longer holding period. There is more due diligence that you need to do on the front end since it's not publicly traded and you have all this public analysis on top of it. But that illiquidity aspect of it is one that people really need to take into consideration. Just because if you need those funds, you probably can't sell it in the open market. There probably isn't a secondary market to be able to offload that to get those funds. And that's honestly one of the things that our founder and CEO, when he created this company, identified was that given these longer holding periods, given the illiquid nature of these asset classes, an IRA actually probably is one of the better places to hold it, given these rules that you have to, okay, you're supposed to keep these funds in for a longer period of time, save it for retirement. These are supposed to be funds just for investing, not really for if my roof breaks and I need to get fix it. That would be a sort of different type of source of funds. So that longer holding period for the IRA really matches up really well with that illiquid nature of these asset classes. And obviously it just helps you compound it over time.
Absolutely, absolutely. And when it comes to selecting the right IRA provider for an investor, how does an investor go about deciding who to go with? What are the things they should be looking out for? How should one go about that?
Mhm. When it comes to self-directed IRAs, the thing that I typically tell folks when they ask me this question, which we do get a fair amount, is you need to really understand all of the fees that would be charged for your specific investment. I can't really, not going to name like specific competitors or anything, but Alto included, you based on your investment that you're looking to make, what are those fees that are going to be included in there? Okay, are there monthly or annual account fees? Are there fees for custodying of these assets? What about for wires? Really getting that full sense of the fee schedule is vitally important, just because historically they have been very expensive. They have been for the high net worth folks. And so they've been able to have those fee schedules that sort of accommodate them. And so that's really an important piece nowadays is understanding what's this going to cost me, because that's going to eat into your returns, albeit they are tax advantage and you get to avoid a lot of things, but you do want to make sure that you get a good sense of that. I would say that that second piece is really on customer experience of it all. Historically, with self-directed IRAs, it's a very paper-intensive process. It takes a while to get things done. As I mentioned, it might take about a month or so to even be able to start making investments in that historical manner. So being able to actually have things online done via tech, be tech enabled and not dependent on a service provider from the other side. Being able to get in touch with that person is really important, because with these types of investments, there's a due diligence typically on both sides of it, you personally, but also with the custodian. And so being able to have that open line and consistent communication with your custodian is going to be really important if you need to make a split-second decision or you need their assistance with moving money. Waiting 2 weeks obviously is not so ideal, especially if you're trying to hit a commitment amount or commitment date.
Yeah, that's huge. And you really touched upon something there, particularly with our partnership, Jimmy, how easy it is with our integration, how easy it is now for investors to go right into that portal and access their Alto IRA funds and invest them not just into our vehicle, but into various other investment vehicles. And it's my understanding that within the Alto IRA website as well, you guys do have a way for investors to go through your various different integrated partners and actually select investment vehicles that way and get a little bit of that due diligence done up front. How does that work? Can you touch upon that some?
Yeah, well, I mean, here at Alto, we do have a couple of options for making these types of investments. Obviously, we have our integrated partners like SuperVest, where we do on the front side an understanding of their offerings. At a high level, is this going to be breaking IRS rules? We can't make true determinations around the legality of an investment, but at a high level, understanding that is this going to be a prohibited transaction of some sorts. So on the front side with our integrated partners, we do a lot of work to validate things, make sure that workflow is easy and simple. But we also do on the more private side, if you say have a private investment that you know of, we do have guardrails in place. We don't require a 3-week long review process just to execute an investment, which is quite common. We do have a lot of technical guardrails in place to allow us to maintain custody and maintain I don't want to say legal, but the fact that this investment can be made. And that can all be done online through a portal. And again, it really takes about 20-30 minutes max to get that whole process set up. So we've tried to take everything out on the front side that we can to make this a seamless process and most efficient possible.
That's excellent. Now, Jimmy, I'm curious, as far as an investor going in and actually developing a strategy around what their retirement goals are, what's best for them, how does Alto help facilitate that for investors when they're doing their research to see what investment vehicles are best for them?
That, I guess, was what I would say is probably the biggest downside of a self-directed IRA in general, is that it is self-directed. The public, those Fidelities, those Schwab accounts, they're restricting you just into these public securities. You can't do anything else. There's no need for extra due diligence on this. So with a self-directed IRA, a lot of that review process, understanding, okay, is this going to fit my investment objectives? Is it going to help me reach my goals? That is something that's really on the investor to do. We are there to provide custody and assist in the process of it all, but the actual deciding whether or not you want to make that investment, whether it's going to fit your goals, is something that the investor typically does on their side. Yeah, but I mean, as Alto might mature, there are potentials for that moving forward. But as a self-directed IRA, it really is, okay, we're going to have the structure in place for you to be able to make these investments, but you need to decide whether or not you want to do them and if it's going to fit your goals.
Absolutely, that's huge. And so, Jimmy, I guess closing out here, closing up, do you have any other tidbits or pieces of information that investors should know when considering Alto IRA as their potential custodian?
Yes, I would say the biggest thing with Alto, and I've touched on this briefly earlier, is okay. So you have this investment in mind that you'd like to make. You really need to consider all the facts of, okay, is this going to be positive one for me as an investor? But how is the issuer going to expect this? Because historically, using a self-directed IRA is difficult from both sides. You as the investors, it's going to be expensive, take a lot of time. But sometimes issuers and private issuers, they don't like using them either because it's really complicated on their side as well. And so one thing that we've tried to do at Alto is make it easy for both sides. It takes about 20 minutes to get your account created here at Alto. It takes 10, 15 minutes for them to accept the capital. And so getting a sense of, okay, that ease and are they going to be even okay with it? Just given the ease of Alto's process, we believe we've done a pretty good job at it. But there are obviously other providers out there as well who have alternative solutions. And so really getting that understanding of what's going on both sides. Self-directed IRAs are not for everybody, but if you are looking for that tax advantage and alternatives are of interest to you, then we believe it's a great vehicle to be holding it in, and we think we have a pretty good process set up.
Absolutely. And to our listeners, just so everyone's aware, if you have questions, now is the time to submit them. Remember to put them in that Q&A chat box, and we'll get to those as they come in. And one thing I want to touch upon, Jimmy, is how seamless the integration has been between Alto and SuperVest, between the support between our two companies and teams, between the technology assisted I guess ease of transfer, if you will. It seems like the entire process from the technology side to the human element has really been fleshed out in such a way that makes it easier than ever for investors to participate in the asset class of their choice, particularly with SuperVest, MCA. We've seen a lot of success with the investors that have come our way through Alto. It's been fantastic to see. And luckily to this day, all we hear is good things about our Alto customers and what they've experienced with you. So all good things. Now, it looks like we have a question that has come in. Let's see. So with Alto Investments, Jimmy, what do you foresee as far as the future of investing in alternative investments overall? Does Alto have sort of a big picture kind of anticipation of where the company will go or where the technology is going to be headed?
Mm-hmm. Yeah, so I can speak on this to an extent. If you look just in the market at some of these large endowment funds, these pension plans, you start to see over the past decade, or really the past 5 years especially, the diversification of these various portfolios. They're really starting to increase their alternative asset exposure. So when you look at the Yale endowment, which is one of the blue chip things to look at, they actually have 50% of their portfolio in alternatives. And I've been continuing to read about how with millennials and Gen X's, alternatives are really becoming more popular, especially given what the S&P and the Dow have been doing over the past year or so. It's a great diversification tool to have these uncorrelated assets, since alternatives and their returns are typically uncorrelated to the performance of the stock market. So just from a diversification standpoint, it really helps you diversify and really getting these different asset classes that may not impact each other in the same way at the same time. So I'd say that it's really going to be increasing, and self-directed IRAs are increasing in popularity in general as well. So I think from both sides, from the knowledge that IRAs are able to be used this way, along with the access to alternatives, which SuperVest is obviously making really easy, it's really going to start to increase over time.
Absolutely. And you said it, I mean, diversification is key. So certainly diversifying into alternatives is very important overall. Now, we did have a question come in, Jimmy. This one reads, and you may have answered this one earlier, but would money from the IRA go directly from Alto to the SuperVest account without touching the owner's hands? Can you touch upon that a little bit?
The answer is yes. So it really is just like another bank account or a debit card that you're using. So you're never going to see those funds in your personal bank account at all. That would actually potentially be a taxable event. So it actually does need to flow directly from the IRA to that SuperVest deal. And it actually changes the name of the investing entity that actually is making it. So it's your IRA making that investment, not you personally, and it's all sort of segmented out. But in short, it does flow directly from Alto to the bank account that SuperVest has listed for that offering directly.
Excellent, excellent. And I'm checking to see if we have any other questions, any questions coming in from our listeners out there.
One thing I will touch on that that people have asked me about a fair amount in my conversations, and it's a stat that I remember seeing a couple months ago, that 70% of U.S. households available investment or investing assets are actually in retirement accounts. So if you have a 401k or you have a 403b, 457, some random old retirement account from another company way long ago, you are able to use those dollars in an alternative investing manner. It really, if the dollars are in a retirement account, what I call the retirement account ecosystem, they are able to be moved into a self-directed IRA. You'll want to have help, obviously, with the custodian you're transferring to, but those unaccessible old funds are accessible and able to be moved around.
Oh, that's huge. It's really good to know, particularly, investors that want to have options to invest. Now, we did have another question come in here, Jimmy. The question reads, do you report to the IRS annually on behalf of the account holder?
We do, yes. So that is in the form 5498. And so that form it's something that we make available to you. We're not going to email it to you directly, but it is available within an Alto accounts dashboard to download. But essentially that 5498 form just tells the IRS, say, hey, Joe Smith's IRA had a value of $52,500 in tax year 2022. So we do report all of that to the IRS on behalf of our clients. If there are any tax-related documents that are necessary to provide, we do provide those, such as a 1099-R. But really, for the most part, since these investments are made through an IRA and you're not paying taxes on them, there are less tax documents that are required than, say, with a brokerage account where you did a bunch of buys and sells. So anything that is necessary, we do provide for download. We are fully an online company. Obviously, we have a great support team, but everything will be available.
Fantastic, fantastic. Sounds nice and easy for the investor. Now, to our listeners, do we have any other questions in the Q&A chat box? Jimmy, it looks like we're coming to a close here. We've got a lot of good information here already. Anything else that you'd like to add as far as Alto, anything that you want investors to know? You hit all the right points. So if you can have it.
No, I'd say for the most part is, if you're passionate about a specific asset class that isn't in the S&P, whatever, anything public, there is probably a way to invest into it. Obviously, with SuperVest, there's this super cool, innovative model to get these small financing offerings. So there is like those tax advantages, probably not a bad call.
Absolutely. Yeah, I think that's the biggest takeaway here, is the ability to invest in all types of different alternatives that you otherwise wouldn't have access to. So it's huge. And with that, Jimmy, I want to thank you so much for joining us today. This was excellent. Did I cut out there? Can you still hear me?
No, yeah, that was me, I think.
Oh, no, you're good. You're good. And I want to thank all of our listeners here for joining us today. As always, we greatly appreciate your support, and we do look forward to continuing to serve you throughout the year. If any of you have questions or follow-ups or would like to connect with either one of us, please do email us at support@supervest.com, and we will see you all next time. Thank you.
Thanks a lot, guys.
All right. Thanks, Jimmy.